Big news just hit the US economy, and it's shaking up everything from Wall Street to Washington. Wall Street, Washington. President Donald Trump has done something no other president has ever done before. He fired Federal Reserve Governor Lisa Cook. Yes, you heard that right. In the 111-year history of the Fed, this is a first. Trump announced Cook's firing on his social media, claiming sufficient cause after allegations she lied on loan applications. But here's the twist. Cook says Trump doesn't have the authority to fire her. She's not stepping down, insisting her term runs to 2038. So buckle up, this is about to get messy. Why does this matter? Well, the Federal Reserve is supposed to be independent. That means presidents shouldn't be able to fire governors at will. But Trump's move has sparked real fear that the central bank's independence is under attack. And the markets are reacting in real time. Let's talk numbers. Short-term Treasury yields plummeted. The 2-year dropped over 4 basis points to 3.685%. Meanwhile, the 30-year yield actually climbed to 4.911%. The 10-year yield nudged a little lower. This is what happens when traders think the president is calling the shots on interest rates. Short-term treasuries dropping like a rock, the yield curve steepening fast, and the dollar, it took a hit. With all this policy uncertainty, investors are nervous about inflation, and about whether the Fed can really chart its own path. Meanwhile, Wall Street didn't flinch. Stocks actually rose, with everyone watching and waiting for Nvidia's results. But beyond the headlines, there's a bigger story brewing. If Cook is pushed out, Trump could reshape the powerful rate-setting committee at the Fed, and that could mean lower interest rates sooner. Just what he's been demanding to juice economic growth. Now, Cook's defiance means this is headed for a legal showdown, and the outcome could reset the rules on how much power the White House really has over America's central bank. So, what happens next? The world is watching, and so am I. If you want to know how this plays out, and what it means for your money, make sure you're subscribed. I'll keep you posted. Recap. The president announced he fired a Fed governor via social media. Cook says she will not resign and disputes his authority. Markets responded. Short-term yields fell, long yields rose, the dollar slid, stocks ticked up. Reaction was immediate and volatile across asset classes. Traders pushed down short-term yields because they expect policy shifts. Trump has effectively usurped the Fed's forward guidance for the moment. That's why the yield curve steepened. Short-term rates fell faster than long-term ones. Investors worry this uncertainty could spark inflation fears later on. As a result, the dollar eased, while longer-dated Treasury yields rose in some pockets. Why did stocks go up? Partly because traders were focused on company results, Nvidia in particular, and some investors saw the potential for lower rates as supportive for equity valuations. So stocks rising while yields rearrange is not contradictory right now. Global markets are watching every twist. Legally, experts say this could produce a protracted court fight. Cook insists the president lacks firing authority. Courts will decide. If she's removed, it could change the composition of the rate-setting committee. That has long-term implications for rates and economic strategy. Expect headlines and legal filings to drive volatility. Scenario 1, Cook's forced out. The White House could appoint more sympathetic members. Scenario 2, courts block the move. Fed independence remains intact. Scenario 3, a messy settlement or protracted standoff. Each has very different consequences for rates, inflation, and markets. And nobody knows exactly which way this will go, yet. Quick explainer. Yields reflect expected interest rates and inflation. Short rates move first when traders price in near-term policy changes. A steepening curve can signal expectations of future growth or policy divergence. A weaker dollar can push import prices up, feeding inflation risk. Stocks respond to rate expectations and corporate earnings. Both matter here. Watch Fed comments closely. Watch short-term yields for policy repricing. Watch the dollar for inflation signals. And watch earnings. They can override macro headlines. And follow any court rulings. Those will be market-moving. Recap, unprecedented firing claim, Cook fights it, yields shift, dollar falls, stocks up, and legal drama looms. This could reshape central bank norms for years. So global investors will be paying attention every step of the way. If you want updates on this story and what it means for your money, hit subscribe and ring the bell. I'll keep posting updates as this develops. Markets move fast. Stay informed. Thanks for watching. Follow for more market explainers. Watch our related deep dives next. Sources: Reuters, Bloomberg, CNBC, Axios. Links in description. See you in the next update. Markets open soon. Stay tuned. Subscribe for live updates.